Good morning. This is the Gold Spot. I'm Eric Sapanic. It is August 26th. This will be our last August blog, and then we're going to go right into September, which is it's moving along quickly, surprisingly. So we want to talk about a couple things today. One of which is we did see a recent pullback in gold, but it is once again rebounding pretty quick. Steve, your thoughts on that?
Well, it's a healthy part of any bull market. You know, this profit taking. People that bought years ago and probably don't have as much conviction as far as how aggressively this economy could be getting in a very negative way with all the stimulus, are deciding it's time to take some profit and probably not necessarily looking at the long-term perspective where the debt just keeps piling up and the future just continues to be more and more. The mortgage just, they tend to be mortgaging our future here. And ultimately, it's going to create a much larger gold price, but a lot of people are kind of getting out early probably because they don't necessarily believe that things are going to get as bad as they may.
How do you feel as though the presidential election is going to affect us as we're now going closer and closer to November?
I think you're going to see a huge amount of volatility in a lot of markets, but I think that people are concerned about the direction that things potentially could go. And it's so close right now, nobody really knows what the answer is going to be, so that uncertainty will create people will want some type of stability in that, and I think that's exactly what gold provides.
Right, and if Joe Biden did take over, he's promising a lot of free stuff at this point in time, so I guess we're kind of wondering how are we going to pay for that and how's that going to affect our monetary policy?
Yeah, that would be nice if we had that outline, but of course it just means more and more money printing, creating more debt that's going to just eventually just overwhelm the systems, and again, you're going to see the dollar just get crushed, and that's it's very good for gold, but it's terrible for the economy.
Absolutely. As far as inventory with SBC, I mean you can probably agree that I think we're trying to stay ahead of the curve here for everybody, and tell us a little bit about that.
Well, what we saw back in 2009 was that the overwhelming supply got eaten up very quickly. And there was a lot of product out there because we had faced a bear market for so long prior to that. This time we're watching that very closely. We saw during the beginning of COVID when this all started going down that the product availability was getting very, very thin. And we stayed ahead of it then. We always had product available, even though a lot of places they weren't even open because they didn't have anything. This time is no different. We're seeing that coming. We know what the wave is there, and we're making sure we have stuff on hand to make sure people can either come into the office or we can deliver without big delays.
That's it for us today. We appreciate you joining in with us. Once again, this is Gold Spot. We'll see you in September.